So, good evening. Welcome to Training Tuesday. I am Bill Brown, the Director of Innovative Evangelism. And tonight I am joined by Paul Eichelberger, who is the Baltimore-Washington Conference Treasurer and Chief Financial Officer, and the Peninsula Delaware Annual Conference's Chief Financial Officer. So, wears two hats, rightly so. And we are excited that he's with us tonight. A couple of technical things to cover. The chat is not open. So if you have a question for Paul, you can ask that in the Q&A, and we'll try to get to questions throughout the evening. And I have been trying to stretch some time because I now see she's coming to the room. So our Gold Star Perfect Attender, Dolores Martin, our conference lay leader, has arrived and is with us again tonight. So she has yet to miss a Training Tuesday. But I also bring that up because Paul has the distinction of being our um, most frequently rebooked guest on the broadcast. This is Paul's 10th
10 times.
Training Tuesday broadcast in our first 5 years. And so it is a joy that Paul is with us tonight to provide not only his expertise, but his passion for ministry and the opportunities that the gifts we give and the stewardship thereof can transform lives in the name of Jesus Christ. So that it's wonderful that he is with us.
Thank you, Bill.
And we are going to start with a word of prayer and then turn it over to Paul. So if you all would pray with me, please. Holy and gracious God, we give you thanks for all the good gifts that you have given to each and every one of us. And we thank you for the opportunity to be able to return our gifts back to you through our local churches, knowing that the local church is that primary arena where disciples are made, and through our giving, we're enabling discipleship. We are transforming lives. So I pray for Paul as he presents and shares with us tonight. I pray for our participants that you would open their ears so they could hear, open their minds to help us understand, and open our hearts so that all we do is done out of receiving and then reflecting your love, oh God. We just pray this all in the name of Jesus. Amen. Now, in good Paul Eichelberger fashion, we have a very extensive and thorough PowerPoint deck. The PowerPoints will be available following the broadcast sometime later this week. You can check both the affiliation website, which is, and I'll put this in the chat, pdcbwc.org, or each individual annual conference websites. And the video will also be posted. And we try to get all of that online depending on a lot of technical behind the scenes stuff by Friday. And so keep checking back to the websites when those are available. Once again, if you have a question, please use the Q&A feature. And Paul, welcome. Welcome back.
It's good to be back, Bill. Thank you. Let's make sure that we're doing everything square. Does that look like we're doing well?
You're going to want to launch the start the slideshow, because right now it's just the behind the scenes.
Let me do that one more time.
Okay.
And how's that looking?
You are now cooking with gas. It's all
Okay.
set.
Well, thank you. Thanks for having me back, Bill. It's been a while. The last time I did a Training Tuesday, I was on with Bill Westbrook, and we did a financial training webinar. But that was almost more than a year ago at this point. And so it's good to be back. Dolores, it's good to have you as part of our group again. 57, if I count them right, 57 Training Tuesdays is what we've done. And we got started in November of 2019, right before the pandemic hit. So it's good to see us still in business, and really appreciate those who've signed up for this webinar. And I'm kind of hoping that this is a webinar that can be used by some of our churches as they go through steps that towards being vital congregations. Tonight's topic is called Project Budgeting and Other Tools for Vital Congregations. But it really builds well on last week's conversation that was talked about aligning money and mission. And so I'm going to start tonight by going, I don't know how many of the participants tonight were actually on the call last week, but I'd like to go through the notes that I took as Mark Sampson was with us last week, and that I want to bring everybody up to speed on where Mark left us at the end of last week before I go into project budgeting and other tools. So let me start with the narrative and give me a chance to go through some of these slides. I'll try to give you as much of a narrative of what Mark brought to us last week, as much of a flow as a narrative as I can. We started out earlier this fall charting a course towards vitality. And when we look at the Training Tuesdays that we've conducted this year, we've been developing vital leaders, charting a course towards vitality, hope and healing in the midst of conflict, preparing leadership to be able to walk churches through the steps of vitality. And then last week was the Training Tuesday, aligning money and mission. In that aligning money and mission, I saw this as walking through the course of vitality and looking at, we have congregational ready as a stop one, who are we and who are our neighbors as a stop two, God-fueled imagination as a stop three. And when I look at the alignment of money and mission, I really think we're looking at the ministry clarity phase, as well as some churches will see that as what's shown here as stop 5 and stop 6 as pre-development and development efforts. But this entire roadmap is focused on what God is calling the church to do, testing concepts with committed neighbors and partners, ensuring there is proven community demand, and developing a growth and sustainability plan. And in essence, as Mark had put it last week, aligning our money and mission. Now, Mark is from Rooted Good, and I have the website for Rooted Good shown on this slide, as well as when we post this set of slides, you'll actually see the link to his Training Tuesday video from just last week, November 7th. So I took some notes, and these are the notes that I had for Mark's conversation with us last week. He talked about the changing economic horizon, that there were two main factors Mark wanted to focus on, and one was the decline in participation in congregations. He quoted numbers of going from, in 2000, 137 average in worship. These are across all denominations, going to half in 2020. And with that reality, it changes the economic capacity of our ministries, just fundamentally changes the capacity to do ministry. The second major change that he made mention of was the giving trends in congregations, that 75% of the giving is from people born before 1964. That counts me. Unfortunately, it counts me, but that does count me as one of the 75%. Those two main economic understandings of what is today's current reality and in the future, what our horizon puts before us, are two of the main things that Mark wanted us to focus on last week, while keeping in mind that God is not going anywhere and that God is the ultimate owner of our resources. Within that changing horizon, Mark was quick to understand that some churches are already facing that horizon today. I definitely see that in the work with both conferences. I kind of call it a 10 to 15% of our churches struggle to make their weekly demands of their ministry today. And then some will certainly face that down the road as this horizon becomes the reality for many of our churches in the future. And he mentioned that the reaction that most congregations bring to this is a flurry of activities. efforts to reduce costs in ministry, efforts to increase your revenue, efforts to take short-term focused and short-term looks at what can be done immediately to attack this problem. And he encouraged us to slow down the process. Rooted Good promotes a process that they call the accelerator model, and it provides an intentional process for thinking about how do you cope with these changing dynamics in our congregations, giving as well as in participation. That process focuses on who we are, what should we do, and why should we do it that way. My note to myself that I added in this was to listen and look for the movement of the Holy Spirit in our midst. Just allow the Holy Spirit to speak to, it's really everyone who's gathered at the table. And it's also, in the process that we've been going through this fall, it's the Holy Spirit speaking through the members of our community that we're in conversation with to understand what their needs are. So Mark further explains that we're really encouraged to bring he's an economist. Let me start with that part. So Mark brings an economist's approach to his ministry, and he understands well what many market-based companies have done with becoming more of a philanthropic organization. Selling products, yes, but also directing much of their revenues and income towards charitable causes. And when he sees that model in the marketplace, he encouraged churches to look at that type of model for being a means for bringing in additional revenue into our ministries. So it's engaging both the economic needs of the church and our ministries, as well as justice, and using those resources that we in the church have today. With the full recognition that most churches have land and buildings, he considered these to be great gifts to our congregations today. And with eyes that are not looking at the scarcity, but looking at the abundance of the assets that churches have today, he wanted us to focus on using our assets to create new revenue opportunities. Mark further went into, what is the process then on how we would do that? So he said, it's all in the process. It's not the outcome that you're looking for. You're not going to jump to answers and try to fit those answers into how a church should be able to do this type of market understanding, market development, and meeting needs in the community. He wants the process to be the focus. How you get there is the critical element of the success, he said. It's not enough just to have a good idea. It must align with the community needs while also creating revenue sources. And he focused on the essential part of creating partnerships with people in the community who might already be doing some of the good work that is felt to be needed within a community. It's partners with experts who understand how to organize a church around a certain type of ministry and what types of services could be offered by a church. Partnerships also can be the way that a church ends up actually staffing or even maintaining access to volunteers to do new ministry activities within the church. So partnerships are an essential part of what Mark brought to our conversation last week. And focusing on projects, he said, that result in a positive impact to the mission are the things that we want to focus on. He actually brought forward. He didn't bring it forward in the presentation, but I know that his materials provide us with this slide that gives a matrix of money and mission. And when we look at this matrix, Mark would say that what you're wanting to focus on, if you're looking at the money side, he's wanting to be able to look at missions that generate money versus those that are costing money. But it's okay to focus on those that cost money if the mission on this axis has a positive impact versus a negative impact on the missions as the church sees themselves meeting the needs of their community. So if you're able to look at the different opportunities that a church is believes are possible within your midst, he would say focus most of your effort in this green area where it has the positive impact of the mission, but also has a means for generating money, breaking even, or costing money, and perhaps there's ways to be able to fund that still. And in conclusion, what Mark brought were some examples. He started to talk. I think it's good to think about what kinds of examples do churches have in front of us as we look at our opportunities for aligning money with mission. He brought out two groups of cases. One was with rental of existing property. He said, who do we rent to? What might align with our ministry? What types of partnerships can we take advantage of as we're considering rental of our property? And he wanted us to focus on hospitality or our sense of calling in the midst of this. And then he mentioned where there are opportunities that exist for doing property development within the church property, just as a large scope, he said, looking at creating multi-purpose buildings, consider affordable housing, commercial kitchen opportunities is one that he has seen, small business centers for training healthcare workers. That's actually one within our conference that I am aware of. So I added that into the notes. And then alignment with the community needs. And in the overall sense, I captured this in my notes, that the goal is to align churches' resources to become more relevant. He used that word a lot. It's trying to make your church more relevant within the needs of your community. And it's not the needs that you think are in the community. It's the needs that have been expressed by the community as you've reached out to them to find that purpose. And Bill, the last thing that I would then bring to this section as we get this started is that when we think about the tasks that Mark had in hand of churches looking strongly at their property and looking at how can that be relevant for within the community, I wanted to bring, I don't know if Cindy's actually on the call tonight, but Reverend Cindy Kent was just recently announced as being the property with purpose coordinator for both of our conferences. And in that role, she'll be working with churches on many of the types of issues that I'm going to be talking about tonight, on how does a church think about renting, think about developing, thinking about how to use their resources wisely in meeting the new needs of their community. And once again, to allow us to see a list, this Melissa Lauber put this together as the announcement that was posted on our website. And if you read the article, you come up with new ideas on what churches might be able to consider. Community gardens, home work centers, community-based commercial kitchens, computer labs for seniors, galleries and studio space for local artists, dog walking services, business workspace and conference room rentals, and farmers markets. That's all packed into the article that Melissa published when announcing Cindy's new job. And Bill, I think, why don't we take that as an opportunity to at least capture what we did last week before I start to focus on what we have for tonight.
Paul, it was an excellent recap. So excellent, in fact, that it has garnered no questions. I think you explained it very well. Mark would be pleased, I'm sure. So please continue.
Okay. Well, so this is our focus then for tonight, Bill. It was termed almost like this was for finance committees, but there's such a overlap in what finance thinks about for these larger projects in ministry that I believe this is trustee oriented, and there's actually a lot of stewardship focus that's on the things for tonight. So I'm going to generalize this and talk about the focus for tonight is with stewardship committees. And when I talk to most finance committees and trustees, the first thing that we start to hear when we're starting to talk about ministries within the building is a sense of concern about funding, concerns about the condition of the property, the the concerns of people and more people using the property. These are very typical. I'm going to say that it's typical for a stewardship committee to take those steps. But I would ask and coach us on this, that with the understanding that stewardship committees can really be a source of calm in the midst of this type of discernment that churches are doing within their communities. And the stewardship committee has two responsibilities. One is, first of all, to participate in the discernment process that's going on so that you can catch the vision that's being cast by the discernment process, and then just simply receive it. Receive the discernment. These two calming factors will, I believe, help us in a process in which you're really trying to listen to your community to understand how can the church best be relevant to the needs that weren't there 10 years ago within a community, but the needs that are there today that were surfaced by asking people within your community, what are the needs that a church can help with? So a good stewardship practices, I believe, will ensure in this calm atmosphere that good experts are brought into a discernment process, that good ministry plans will be in place. We'll go through a little bit on what a ministry plan is tonight, that good partnership agreements are in place. We know from Mark's conversation last week that partnership agreements are important to this process. And we're going to ensure organization controls are established and good financial management is maintained. So these are the types of things that we're going to work on tonight. First of all, with the ministry plans, financial budgets, whole slew of a little bit of topics about budgets. And then we've got some related matters that I'd like to bring up as our last part tonight, in organizational structure, exempt purposes, unrelated business income taxes. I know some of these came up last week at the end of Mark's conversation. Sale of local church property and building use agreements. Okay, so that's the topics that I want to bring to us. And I believe that as we look at the best practices for budgets, as well as also these related matters, some of that is just allowing our stewardship committees to be a good resource for understanding what can be done, what are the right things to do, who are the right experts that we need to contact. Okay, so Bill, let's start here first with business plans. So if you come from the business community, you're used to looking at business plans as being a plan that you would put before a group when you're trying to convince them to do a new product, a new service. Maybe it's getting investors involved. Maybe it's going to a bank for a loan. These are the types of things that a business plan has within it. We know that those are substantive documents in many cases. Many cases, they can be as short as 1 or 2 pages. But nonetheless, there's a process by which a business goes about identifying how they're going to do a service and other aspects of the business. I'm going to liken that very much to a ministry plan, that there are key components that a ministry plan should have in it. First one is an executive summary, a short explanation that allows somebody to read the executive summary and understand what is the new ministry that somebody's proposing. What are the offered services? What are the details of what you're going to offer? How will it be offered? What's the cost of how it will be offered? What kind of staffing will you need to be able to offer that service? What types of partnerships might be needed to be able to offer that service? Those are the types of things that could be included in that section. Market analysis. Market analysis would allow you to say, these are the people who are already engaged in this type of service. They could be engaged in that type of service in my community today, or it could be identified as this is the need within the community, that we see this service in other communities, but our community doesn't have that service. So that market analysis, understanding the basics of whether the service is needed by your community, what the cost is for others who have provided that service, these are the types of things that can go into a market analysis. Marketing strategy is simply, how are we going to communicate this? How will we allow people to know that we're now providing this ministry, this service within the community? It's as simple as that. And then finance plans and projections. This is how you make sure that you don't get in over your head, that you understand how a service or ministry can be funded, and that you have your funding plan in place before taking those first steps and putting in place the new ministry. So the church's discernment process will be pretty much documented in this ministry plan. And following a business plan really does provide a good model for us. So what I'd like to say the value of this ministry plan is that it's going to be a written plan, first of all. It ensures transparency and completeness. It allows others to be able to read the thoughts, identify what the shortfalls are on it, make the plan better by allowing that transparency. It also allows the discernment team to check their facts and challenge their conclusions. It enables buy-in from others who were never even part of the discernment process. It provides a path for feedback should the assumptions change. So if you've assumed a certain cost, or you've assumed a certain assumption that this is a need within the community, if that changes, you can always go back to this ministry plan and make changes to it. And it provides a path for implementing the new ministry. These are very critical parts of almost all projects. Now, when it comes to the financial plans and projects and projections, I just want to spend a little bit of time now on budgets. So what are the startup costs of what this ministry would take? What are the ongoing operational costs? And what costs must be covered by the congregation? What grants are available? What revenue streams are expected? And let's keep the projection income and expenses separate from the church operating budget. I really like having this new ministry separately accounted for outside of the church budget until it matures and actually becomes a program within the church, so that you can actually understand what's happening to the overall costs associated with a startup. And as Mark had shown in that matrix, we're not wanting to just do ministry that costs more money for the congregation to support. We're actually looking for ministries that are able to at least break even and potentially generate income to be able to be self-sufficient. So let's take a little bit closer look at budgets. Now, in its simplest form, a project budget can just simply evaluate the total income and total expenses. And if we were to look at this slide, we'd simply say that we're looking at the income. 47,200 is the total. We've got three sources of income for this. We have transfers from the church operating. So the church has agreed that they're going to fund 40% of this project, essentially. Special offerings and other income was identified as a special source, and they believe that they can get $20,000 for this project. And this is just a generic project, but let's assume that this project is something that has some deferred maintenance that has to be addressed before that space is then available for the new ministry. So we're going to repair the roof for $18,000. We're going to have some space renovation to be done. We're going to fix some walls, paint the walls. We're going to actually need to buy some equipment for this. So $15,000 for this project is needed for equipment. And then there are other things that we're going to do for inspection of the space, consulting fees, supplies, and contingency. So many times you look at this type of a budget and you say, well, this looks like a good project budget. It breaks even. We've got all the income equal to the expenses. The problem that I have with this is that the timing of the income and the expenses is what makes a project either a success or a failure. So I'd like us to think about doing much more of a cash flow report when we're looking at project budgeting. Let me go to the next slide and we'll show what that might look like. But the problem with a project is your expenses and your income might not line up. And so if the income doesn't line up perfectly with your expenses, you can end up in a situation like this, where in the beginning part of a project, your expenses, looking at the cumulative expenses, actually increase pretty severely in the beginning. And then it's really not until later in the project that this project received a grant. Let's talk about that jump in income is a grant that was received halfway through the project. They didn't get the project started until they had a little bit of income already in place. So they were thinking about getting some money available to be able to fund some of that early expense. But in the reality, this project turned out to be negative shortly into the project, and it didn't turn positive until at the end of the project. So if you don't do a cash flow type of analysis, you may not really understand that there's a negative gap in the funding plan that happens during several of the months or several of the years potentially for a much larger project. So what I would propose to us in doing this project is to look at cash flow reports. This is a short project, 3 to 6 months. Cash flows could be much longer than that, but let's just think of this as a smaller project, 3 to 6 months. Get the timing of grants, expected giving and pledges, anticipated flow of expenses. What I'd like us to be able to do each month then through this type of a cash flow report is calculate the end balance at the end of each month. And report becomes a source of analyzing the spending plan, and perhaps this budget gives you the ability then to adjust both the amounts of the expenses and the timing of the future expenses to correspond with your cash flow. So let me show you in a format of a spreadsheet what I see in this type of a project. So the right-hand side has your project forecast. 47,200 was our total income and total expenses. That's fine. It showed that this church kind of did that programming to understand that they needed to collect some money before they got into the project, because there was a major expense early on. In this project, 2 months into the project was going to be when they'd repair the roof for $18,000. So they realized that they needed some money up front, and believe that this tool then allowed them to understand that they set a target for $26,000 is what they needed in place to be able to make sure that they weathered those expenses when they came in place. They were able to say that $20,000 was needed from the congregation. That would have been an unknown initially, but to know that that was an important number to be able to fund the roof repairs, that's probably how that was voted on by that congregation, to put $20,000 towards this project. Special offerings and pledges were made for $6,000 ahead of the start of the project. And the only expense that hit this project before the project actually got started was a consulting fee, as they were looking at some of the different designs, different roofing contracts, different types of equipment. These types of consultations were done ahead of time, and there were $2,200 of expense by the end of September. So they start the project with $23,800 in their account that they've called the project account. And $23,800 was good enough to allow expenses. If you look at the net income for each one of these months, there's a lot of the red showing that the expenses exceeded their income. For most of the months, the only month that it was positive was the month that they received a grant. And that $23,800 at the beginning of the season, at the beginning of the project, was sufficient so that every balance for each month that they forecast was positive. This becomes the tool then for the church to be able to say, if my grant looks like it's going to be delayed and it's no longer November when it comes in, and that pushes over to December, well, I better push the repair of the roof off to correspond when that grant comes in. These are the types of things that you can then identify. If you first draw up the entire cost, the entire projection of your income and expenses, and you have any negative numbers down here in your balance, then you'll know that you might have to have additional funds at the very beginning. that the right ask isn't 20,000 from the church, but it might be a higher number. Or you ask for the grants to be received before the project actually starts. These are the types of things that you might be able to do. So this is one of those tools. I think this is one of those best practices that will allow a stewardship committee to be able to work with discernment teams and bring a best practice into the midst of these, what tend to be not normal activities of a church, to make sure that they're done well and that the financials are managed well as we're considering what can be difficult work. And Bill, I think this is, Bill, I've got 2 more slides on budget and then we'll break for, so I wanted to allow us to just see the language that's part
Sounds
of
perfect.
a development budget. A development budget oftentimes is called the pro forma financial statements. These are complicated. These are very involved reports that are made by accountants. You hire an accountant to do this. You don't have the church treasurer do something like this for a pro forma financial statement. And it is usually intended to support new capital investments, capital structures that are being put on, acquisitions, mergers. These are the complicated things that an accountant would pull together a pro forma budget for. The budget is based on assumptions, assumed costs, and assumed income streams from your project, especially the capital projects. And it provides information to potential partners in a development project, primarily. In the sense of a language that's brought into a pro forma budget, we have different types of costs than what a church normally deals with. Acquisition costs, both for the building and for the land. Construction costs. These are the hard costs of a project that are involved with actually constructing or modernizing a building. And then the soft costs are those types of things that are the services, legal support, accounting. These are the types of soft costs that a project would have. In the big scheme of things, soft costs might be 10% of the project, with the rest of it being either on acquisition or construction costs. There are also cash flows that are done with a pro forma. This is simply a snapshot to show you what a cash flow might look like in the way of the types of revenue streams that come from a development project. Usually it's residential income. If it's an affordable housing type of project, parking income was considered on this project. Laundry income was actually considered on this project with growth rates. What does it start off being? And then what's the growth rate year over year anticipated? Now, along with that, it comes with expenses. Both maintenance and operating types of expenses are typical in these types of development projects, as well as reserving funds associated with keeping the building and addressing deferred maintenance in the future. In this case, it was 1% of building reserve was built into the project. Debt service can be often times included in a cash flow as you're servicing the debt. And then this gives you your total cash flow. This is very similar to what we had examined at the simple project level. You're trying to make sure that the cash flow doesn't go negative throughout the life of the project. And if it does, then you make either changes to the revenue stream, obtain different paths to accomplish the same thing, or look at your cost structure and reduce the costs that it costs to actually do this development work. Bill, that's my conclusion on the budgets before we move on to the other items.
We've got a couple of questions that have come in, Paul, that are clarifications more than questions around the budget. So in one of your earlier slides, you were talking about making the space available to more groups, whether it's through rental, whether it's shared use. And one of our participants is just curious if you could address any safe sanctuary concerns and how having, I'm going to interpret some of this, but how having the increased traffic, particularly if it's a more urban environment, more people coming about? How do you take all that into consideration with safe sanctuaries if there are going to be children present in the building and youth and vulnerable adults?
Well, so we've been through this process a little bit with the Boy Scouts, Bill, is how I bring that out, is that safe sanctuaries, Methodist church practice. The partnerships that we talk about as you're bringing groups in to use the building, I believe what we saw through the Boy Scouts was the Boy Scouts were organized to be able to address safe sanctuary. They had their own practices. And that would be what you're looking for from any group then that's partnering with a church to provide services in your midst. They either have to develop those safe practices or they need to adopt what you know is your standard. So I actually know a lot of churches who, when they're doing building use agreements, they have a coordinator at their church who teaches safe sanctuary to groups who are using their facilities. So I think these are all the best practices that I'd share with you, Bill, to address that type of situation.
Then what I hear underlying your response as well, Paul, is to make sure that churches do their due diligence and do their homework to make sure that either as you said, the organization has their own practices that mirror or at least meet the standards that we've set, and if not, to train them in our own
Train them in
procedures.
and training them on our own is kind of the lowest bar of standard that I would want that to be to held to. That's for the groups that don't have the organization to really develop their own program, right? But for what we're talking about for these ministries, I believe partnerships would it would be part of your partnership to require the same types of standards to be in place and trained by that partner for their people, their staff. And when you have the general community coming in, Safe Sanctuary does have standards. We do this with daycares. We do Safe Sanctuary. We're bringing children into our midst. It's the staffing's responsibility to maintain those standards. We would do the same with the general public who's using our facility.
Excellent. And our second question is just around some terminology.
Mm-hmm.
You've been using the term stewardship committee. The participant would like to know if that's the same as the finance committee. And if it's different, how does this committee function compared to the finance committee? So first, is the stewardship committee the same as finance? If not, how do they work?
Now, that's interesting. So that's probably a conference term. So I talk about how the finance staff and I relate to stewardship committees at a conference level. And the stewardship committees at a conference level are your Council of Finance and Administration, your trustees.
And there's our cost-saving measures and work.
That must be my 1 hour with the lights off. So the stewardship committees at a conference level, I relate to the Council of Finance, the stewards, the trustees, and also the Board of Pensions. So that's how I think of stewardship committees. At a local church, I would call the stewardship committees, finance committee, and the trustees.
Excellent. So it's people who have responsibility to steward the resources, to care for the resources that have been entrusted to the congregation.
Yes, exactly. I could put the SPRC in there too, as a special leadership role, stewarding.
Wonderful. Well, we're caught up for right now.
Okay. Well, we get into some details now. So with the time remaining, just allow me to go into some of the more complex things that we have for tonight. Let's make sure that we're so far so good on the showing of the screen, Bill.
All so far so good. And as people have asked, we are recording tonight. It will be available later this week. And the slide information will also be available when the video is posted. We'll just ask people to check the variety of websites, either bwcumc.org or pdcbwc.org, so that you can find out where this information is located.
We're going to have active links when these presentations are put on the website. You'll be able to open these up and you'll be able to link to some of the things that are hyperlinked in the PowerPoint. So this is one of the slides that has some of that data. So these are topical conversations that we're going to go through that relate to the types of projects that are being proposed as we look at our property, consider rental of the property, and consider a development at the property. It can even be just deferred maintenance being corrected so that you can allow new ministries to be incorporated into your midst. So an organization structures is part of this. There are several checklists that I want you to be aware of that help a church address their organizational structure as partnerships and development projects are being considered. These checklists are the type of checklists. Well, let me see. Let's see if I can get one open. Okay, Bill, the one that I've opened is one for the Delaware.
Okay, I can see it, Paul.
Okay, so
I want to make it a little bit bigger.
I can do that. Okay, so in Delaware, if you simply Google search the state or the district that you're in and nonprofit checklist, you'll be able to find these easily. The one that I have here is one from the Delaware Alliance for Nonprofit Advancement. They give you a checklist. Many of these projects might entail thinking of starting a new nonprofit that's separate from the church. And so these checklists can actually allow you to start to understand whether that might be something that you need to consider. If it needs to be considered, this is not, you don't go read a website to understand whether you should start a new nonprofit or not. This is all done with an attorney or a CPA walking you through exactly what you're wanting to do with the ministry and then helping guide you whether or not a new nonprofit would help in doing that type of work. But there are checklists that go through how to explore getting a new profit, how to organize, creating mission statements, drafting bylaws. Each one of these links provides you access to information to know how to do that, how to obtain a tax ID number for your new nonprofit. If you are going outside of the group ruling, then do you need to go to the IRS for a tax exempt status determination letters from the IRS? These are the types of things that you see. Counties really regulate whether you have property tax exemptions or not. And so for Delaware, they've given you some of the contact information to be able to talk about tax exemption on your property and the impact of that nonprofit might have on your tax exemption. And then there are different checklists to make sure you know what you're getting into as far as maintaining your status as a nonprofit within the state. And then they give you some additional resources. I think this is a pretty good checklist. Each area has come up with their own standard when it comes to this. And I just want you to be aware that this is available. And I found these to be quite helpful in being able to talk about the different options that are available for starting a nonprofit.
Now, Paul, as there people are looking at these checklists and these websites, the question did come in. I thought it was relevant to this particular part of the topic. Do the same sites, or do you know of any sites where people can look for assistance to find available grants?
Now, that's interesting. So, if somebody were interested in that, I think Cindy and I are going to become experts in that world. So if you're ever asking for a specific type of grant, how about if it comes to us that way? And I think Cindy and I will be good resources for vetting those and starting to ask those types of questions. I simply know that I used to work with Rebuilding Together, and I know I used to be able to find grant sources like that. I do know of those types, but I do think you need to know a little bit more about the type of grant that you're asking. You have to stew that down to make sure that you're targeting exactly the type of area that you're focused on. And I actually think some of the conversation tonight will allow us to see how broad this area actually could be in which grants are available, Bill.
Thank you.
Well, let me just tie this up. I made reference to this third bullet point a little bit in the conversation about how a nonprofit can either obtain their 501c3 status through the UMC group ruling, which is controlled by Nashville's legal department, out of General Counsel on Finance and Administration, or an attorney or a CPA might guide a church to actually independently approach the IRS for a determination letter as being a 501c3. This is done with a Form 1023. I simply put on this slide the ability to see that they have two series of 1023 forms. One's an EZ form if your receipts are less than $50,000. Assets less than 250,000, you can do an EZ form. It's much more complicated to do the Form 1023. These actually, there are consultants who do 1023s for nonprofits. They are complicated to some degree. Probably don't want the church member to identify this is the first time that I want to go do a Form 1023. It's at least wise to go find others who have done a Form 1023. Maybe they can give you some free advice on how they filled those out. I would not just simply do a 1023 on your own and then submit it. These are complicated that take a while. The involvement that I've had with determinations on 1023s sometimes have actually come with significant delays with the IRS, and even to the point where state or congressmen and senators have been contacted from your state in order to help prod the IRS along in processing your paperwork. So you want to make sure that if you're doing this route, that you're giving yourself the best advantage possible to be able to make sure it goes through quickly. And that, once again, it is a best practice to be able to contact attorneys and CPAs when doing this type of work. Let's go to the next major topic that we have then, because it's very closely related, and it's the exempt purpose. I learned a lot when I did this research on this, and I found an IRS link that's up at the very top of this slide that helped me to understand a little bit more than what I had known at the top level of 501c3 purpose. It's very common to understand a 501c3 as being this right-hand list of being for religious organizations, educational, scientific, literacy. I didn't know this one. Test for public safety is included there. These are all in the IRS code. The IRS code is Internal Revenue Code 501.C.3. That's how the 501c3 gets its determination. I did not know that if you fostered amateur sports competitions, both nationally and internationally, you were able to get a 501c3 status, and preventing cruelty to children or animals is also considered a 501c3 purpose. At the very beginning of that list of religious, educational, scientific, they say charity. And I've always read charity to simply say, oh, that relates very well to religious. But I learned a lot when I found this link to the IRS website that actually explained what charity meant. And they used what they called a generally accepted legal sense about what a charity is. So I think the way for us to think about this is the IRS is telling us how broad the 501c3 is for our purpose. It goes well beyond what we think is the religious exemption that allows us to hold worship services and Sunday school. And it allows us to really expand into the areas that traditionally would fit very well with churches on this charity measure. So I'd like to read through these. Once again, I'd like to focus on lists, creating ideas, getting conversations at tables of what can be done. If a stewardship committee is able to think, oh, my 501c3 status is way bigger than just Sunday school, I can start thinking about relief of the poor, relief of the distressed, relief of the underprivileged. Once again, this is all in IRS terminology that this is being given to church so that we understand how broad the 501c3 can break out into. Advancement of religion, advancement of education or science, erecting or maintaining public buildings, lessening the burden of government, lessening neighborhood tensions, eliminating prejudice and discrimination, defending human and civil rights secured by law, and combating community deterioration and juvenile delinquency. It's almost as if you're reading off of the front page of your newspaper and you're identifying where the charitable needs are for our communities today. And I think every church can really be, Holy Spirit will put on us such a weight if we dwell on what charity is needed within our community, that I don't think there's a way for a church, once they take this exercise on, to escape the calling of our church to address these needs. And so I didn't think that I'd find a ministry tool within the IRS, but I do think that this listing of how charity can be brought to our communities by a church will embolden us to take these next steps. Bill, any questions as we go through those? I've got 3 more detailed slides then.
Paul, I would not say question. Well, one just came in. But before I even say that, I have been in local church ministry for a few years, and I think you are one of the rare, I wouldn't say rare, I think you are a wonderful model and example of a finance person who has invoked the Holy Spirit more in this one webinar, and how that, I'm just always so impressed of how that and your faith guide your financial work. So first of all, thank you for that. The question that did come in is, do some of the specific purposes that are allowed as a 501c3 organization also be specified in the purposes of the corporation documents? So do you have to, in the corporation, do you have to put some of this list into your docs?
It's an interesting question. So I did read, and I do have some examples for some links in the next 2 or 3 slides that will allow us to see some good resource material. And they do actually talk about making sure that you broaden the exempt purpose well enough when you're doing your new applications for a nonprofit so that it does encompass. Make sure it says charity. That would cover everything in this list on the left-hand side. And they even said for a church, include the religious and educational. It all falls into play then, and it can be questioned much less. But I will tell you that when I looked today at the 501c3 determination letter for the United Methodist Church, that letter of determination does not claim what the purpose is. Now, I don't know if it was just before they had to put that purpose inside of the application and the determination. And that could very well be, because I think the application has to really contain what is going to be your purpose of this new nonprofit. But they do mention broaden that so that you're not constrained.
Excellent. Thank you, Paul.
Okay. So get a little bit in the weeds when we talk about unrelated business income tax, but I simplify it by telling you that you really do need to get an attorney and a CPA into this. So this slide allows you to understand the complexities that are associated with unrelated business income tax. But I was very pleased to come across a good resource, which is down here. Does your church owe taxes on alternative revenue? It's a document that I think is probably about 20, 25 pages long, and I think it's an outstanding one from Church Law and Tax. They're a very good resource on this type of matter, and they give some examples of what would be considered unrelated business income tax. But the first one is the mechanics of it. If you generate income from activities that are not related to the church's exempt purpose, and that exceeds $1,000 per year, then you need to get a CPA to take a look at this with you to understand whether you need to file a Form 990T, first of all. The threshold for that 990T is $1,000 per year. And to determine whether the types of income that you have from alternate use really are unrelated. So they gave some examples. These seem pretty obvious to some degree. The rental income is one that we struggle with, because if you rent your parsonage and your parsonage has a mortgage on it, then it is considered unrelated business income. So they don't want a church to go out and buy property, put a mortgage on it, and then start putting it on the market to rent. And then the rent paying is a form of paying that mortgage off. So that's a detail that's built into the UBIT. Operating a public restaurant sounds very unrelated. Selling advertisement in the church's newsletter, believe it or not, could be factored in and accumulated to over $1,000 per year for some churches, perhaps. That is unrelated business income. If you're conducting travel tours, they said some churches that do that don't necessarily make them all religious in nature, and so that would be considered an unrelated business expense. These are fine. You pay taxes sometimes you pay taxes, sometimes you don't have to pay taxes when you put a 990T in. Just because you do a 990T doesn't mean that taxes will be paid. But they gave us a threshold here that said that if that income were greater than 20% of the total church income, then what happens is you can put your tax exempt status into jeopardy. So the key is, this is a very complex part of the IRS laws. It involves things like volunteer exceptions. So if you have volunteers as part of this generation of income, that has to be read a certain way. Activity regularity. Are you selling pies to the public 24/7 for every day of the year, or are you just doing it as a fundraiser periodically? Bingo games exceptions are part of this law. Convenience of member exceptions are part of this law. Cell tower exceptions. So if you have a cell tower, that income is exempt from unrelated business income tax. So that's considered part of the ministry, believe it or not. And donated goods are an exception as well. So this is a complex area. That's all I really wanted to say about that tonight. Bill, let me finish it up and then we'll go to any last questions. It came up last week, the sale of local church property. So I wanted to confirm what the trustee chairs had told us last week, that you do use paragraph 2540 for unincorporated churches. 2541 is the paragraph for incorporated churches. So 2540 unincorporated, 2541 for incorporated churches. And this paragraph applies to property sales, transfer of properties, leases that are greater than 30 days, and anytime you're doing a mortgage. So when you have any of those instances, then there's a procedure that must be followed. You call the district superintendent in the district office, and the pastor, district superintendent, and the district board of church and location and buildings must conduct a review. It's very precise on how that review is to be conducted within these two paragraphs. A church conference is is the goal of this paragraph, so that you get an authorizing resolution approved by a church conference. I believe it's a simple majority vote that applies here. The notice for that church conference has to be publicly announced in the pulpit at least 10 days prior to the vote, can be put in the newsletter, also those types of things for communicating it to the members so that they can be in attendance at the church conference. One additional step then, after you get the church conference vote, then the resolution should go to the conference or to the church trustees, and the church trustees are allowed to then nominate and put into a resolution the name of 2 of their trustees who will sign the closing documents for these types of transactions. When these transactions are recorded with the county for the property records, district superintendent's consent letter goes on it, as well as a pastor's consent letter. So this is a slide mainly for our reference for those people who might be considering those types of transactions. And the last one that I have is facility use agreements. We've got on our website sample facility use agreements. I have found that the insurance carriers are a very good source of this information. I show you just a clip of what Brotherhood Mutual has. Another facility use agreement that we have on the website is one from Church Mutual. The third one that we have came out of the Boy Scouts for how a facility use agreement should be done with any scouting troop. So the link is to the website that allows us to see those samples. I would simply say that built into facility use agreements is this understanding of, am I charging rent for it or am I not charging rent for it? Is it rent or is it a donation? These are the types of questions that I've heard from churches, even the conference center, as we're using rental agreements or use facility use agreements with groups that use the conference centers. So there are a couple of things to keep in mind. The IRS is very precise about this, that they allow a nonprofit like a church to support rental of their space to a verified nonprofit at no charge or less than market, which they're very particular that you want to get their group ruling letter. They probably don't have a group ruling letter, so they're going to get their own IRS determination letter that they're a nonprofit. A non-churched nonprofit has to provide annual reports to the state to keep their nonprofit status current. If they miss after 3 years of not reporting annually to the state on their nonprofit status, then they can lose their nonprofit status. So you have to verify in current terms whether a nonprofit is still considered by the IRS to be a nonprofit. So that verification is an important aspect of it. The second part of it is, essentially, these are the only people that they will allow a church to use their facility at no cost. You would be violating your exempt purpose if you used your property tax and your federal income tax exceptions to be able to provide a space within your church for another organization that is not a nonprofit. So a church can get into this type of a situation when they are renting to, it can be a staff member of a church, and it can also be somebody from the community who's doing ministry or doing a service within their church. I've actually seen this I've seen chiropractors in churches. I've seen musicians who conduct music lessons for kids in their church. Those uses of the facility have to be done at market rate. And if they are not done at market rate for these people who are using a church facility who are not a nonprofit, they talk about, if it's a staff member, they talk about that being an inurement for the staff member. They're actually receiving a benefit that they would normally have to pay higher amounts for if they went out in the market to buy the similar space, similar access within a space. And private benefit is for somebody in your community who's using your church, and they're benefiting by using the space at less than market rates. The IRS is very clear that if for those individuals, you need to provide them with a 1099 showing the benefit that they received by not getting a market rate. So this is for those who are not nonprofits. So just know that when we look at the types of charitable things that churches will be doing with their space, renting those spaces out, developing their spaces, these are being done for nonprofits. And those nonprofits can go and they can use the building. Partnership with nonprofits can be done with no cost associated with using a church building. And the IRS fully endorses that. So rental income is not a donation. So if you receive rental income from a group that's using your building, no, it's not termed as a donation, it's income. And that rental income is something that could be part of your unrelated business income that needs to be taxed. It's okay to be able to say that you're receiving income that needs to be taxed. You just simply pay the tax. And if it's less than 20% of the overall income of the church, then it's not a problem with keeping your tax exempt status. And I've always found that consulting with your insurance carrier is the best place to go when you're looking at a group using your facility. They'll keep you safe from safe sanctuary types of standards, from making sure that they have the proper insurance coverage so that they're covered as a group using your building. And they'll make sure that you have the right agreements in place as well, just like you've seen here for the samples. 2 other resources here on your link that are worth reading when you get the opportunity. And Bill, that takes us to really the wrap up. If you let me do the wrap up, we'll take it into the
Perfect.
questions. So we bring you some of these details simply to allow you to go in with confidence into these next steps. These are difficult projects. These are not the normal projects. These are projects that might seem very large for the number of people at your table. It might be the project that you don't have anybody at your table today who has the expertise to even consider some of these. But we've talked through a process where even a small group, when spoken to about what the needs are within their community, can be surrounded by partners who have the expertise to know how to organize and how to approach bringing services within your space. And going back to Mark's conversation, it truly is a gift to our generation and to the generations in the future as well, that we have the property and buildings that we have to be able to conduct ministry within our communities. In the opposite of that is, if we don't proceed in a path which allows our churches to be sustainable and to keep their footprint in our communities today, we will go down a path where we lose our footprint in the community, where we will lose the building, we will lose the property, and with that comes the loss of the opportunity to do ministry within the community and to be relevant within the community. So that's the picture that we're painting. It really is a point of discernment for all of us on how the church will be sustainable as we approach the horizon that some of us see today and some of us will see in the future. And with that, I believe the calmness that we have in the good practices that we've talked about tonight can help us in navigating that route. And with God's blessing, we'll proceed.
Thank you, Paul. No other questions have come in. It just strikes me, a couple of things strikes me very well. Let's first, if we
Let me
can
stand
stop,
up, Bill, so my lights go on.
and let's stop sharing your screen. There we go. Um, it strikes me that, and I've known this, but it's good for people to realize that we have to begin thinking beyond or in addition to the offering plate.
Yeah.
And so often our go-to is to the fundraising pool versus how do we leverage our current assets to not only keep the church sustainable, but to make a difference in the community. So I appreciate you and then Mark last week giving us those insight into how to do that. And friends, this will be all available on the website. That you'll have all the links that Paul is referring to. But it just reminds me that we need to ensure that people do their homework and don't enter into some of this lightly. And so I appreciate your helping us with that due diligence. We did get a question that just came in: is rental to individuals for social gatherings taxable?
Anything that's received by use of that facility. First of all, you'd need to benchmark what that market rate is. A church can have a different rate. I don't know if this is a best practice, but I know this is a practice. A church can have a different rate for the members of the church because you've been giving to the church, and it's considered part of your tithes and offerings to possibly give you a lower rate. But if you're opening your space up to people from outside the church and you take in funds for that, that is called rent. That is income, and that is a taxable, that adds up as part of your unrelated business income. It's not part of your exempt purpose to hold a social gathering for somebody outside of the church.
Wonderful. Thank you. If someone wanted to reach Lucinda Kent, I know there's an email address that is in the article. May I share that in the chat?
I think that would be a good thing.
All righty. So if you are interested in reaching out to Lucinda Kent, our new property with purpose coordinator for both the Peninsula Delaware Conference and the Baltimore-Washington Conference, her address, her email is in the chat. It's the letter P, the number 2, P2map at bwcumc.org. And that is good for both annual conferences. And then I see, Paul, that you have a updated email address, and I'm going to type that in the chat.
That's my updated email, and cell phone for anybody attending a Training Tuesday is a legitimate way of getting a hold of me, especially as I'm going between Dover and Fulton.
Paul is becoming an expert at commuting across the bridge.
I was a bridge avoider until Bill and I started working in July together. Bill Westbrook and I.
Yes.
By August, I was a pretty good pro going across the bridge.
Wonderful. Well, Paul, again, I want to thank you very much for your 10th anniversary broadcast. 10th. I have lost count of how many I've done. But thank you so much, because you bring such an expertise. But again, I think that your love of God and Jesus Christ and the Holy Spirit shines through the work you do, because it could just be about stacking BBs, but you are really helping us expand our understanding of how we can use our assets all for ministry. And you've really you've always let ministry come first, because we talk about often that money follows ministry. And so I appreciate you, and I appreciate the time you've taken to be with us tonight. And let me put a plug in for next week. If you want to say anything, Paul, please do, as I look up
as you're looking that up, I just want you to know the process is one of learning from each other on this. I very much look forward to working with Cindy, who has 15 years of experience doing property management. Each project will have its own character, will have their own obstacles, and it's through the conversations that we're all going to learn together on how best to proceed with these.
And so next week is the week of Thanksgiving. We are taking off from the broadcast, so please enjoy your Thanksgiving week, and make sure to pause and give God's thanks for all of the blessings that we get to experience. On November 28th will be our last Training Tuesday of the fall season, and we're going to be joined by Erica Robinson Johnson, the Chief Administrative Officer for the affiliated conferences, and she's going to guide us through a webinar on Toward Better Meetings, Crafting Meaningful Discussions, Decisions, and Change. And I love her description. I just have to read it because I can resonate with this. It says, tired of going to meetings where you accomplish nothing and repeat the same conversations. I've been in a few of those. Time is valuable, and meeting just to meet is not what anyone wants. So this is geared towards our church councils to have vital and vibrant meetings. But as I've looked at what we're offering, it is good for any committee in our local churches that conduct meetings. I think all of us want to find ways to do better meetings so we can have fruitful discussions and make impactful decisions. So please go to the BWC website or the pdcbwc.org, and you can register for the November 28th. And with that, Paul, thank you very much. And to all who participated tonight, good night and thank you.